Good evening. Good evening. Good to see you all. Happy Tuesday. What an interesting market we've had. Am I right? Tell you what, it's like that VIX was holding on, and then all of a sudden gave a ton of it back. Are we out of the woods? I don't think just quite yet, but we're pushing those highs. Sorry, let me move this out of the way. Hold on a second, please. Okay. All right. Give me a second here. We're going to let everyone join us here, get in, see how things are looking, uh, et cetera, et cetera. Hello, Perry. Good to see you. Good to see everybody. Okay. Looks like everyone who's here's audio is on. One more person joining. Welcome, Brad. Good to see you. Okay. We're all in. Welcome to the Market Watch Group Trading Foundations. Remember, this is 2.0. This is our second iteration. We're tightening it up a little bit, condensed a few of the modules or sessions that I realized didn't need as much coverage or information as we had, freeing us up to double the amount of time we spend on options the next time around. So options 2.0 will be twice as good. And this is just as good, only faster. Beautiful. Today, with our agenda already almost the first month through, that's almost halfway through. We've talked about risk. We've talked about technical analysis. We've talked about making sure we understand orders and what type of trader we are and charts and our accounts and order types and all the foundational stuff is in place except this psychology, trading psychology, right? I have a slide that I used to put up for almost every psychology presentation I've ever given. I've done them for a long time. I've studied and written content and curriculums around trading psychology and risk management, going back to 2006, 2007 when I was working at Thinkorswim. Hello, Bob. Good to see you. So the slide had a little cartoon. It was a cartoon called Pogo. I was not actually familiar with it, but the quote was resonated with me. It said, "We have met the enemy and he is us." Right? If you look at the top 10 trading mistakes, go to the content library. The link is in every email. Go to the content library, pull up the top 10 trading mistakes, and you'll realize it's all self-sabotage. It all goes back to mindset, to philosophy, to the work that we put in to think about an approach to build our perspective. We don't just accept, oh, this is my perspective. No, we work to refine and improve our perspective. We're very deliberate in our approach, looking, of course, for constant improvement. So that's trading psychology. It's everywhere. I hear people still say, oh, you've got to take the emotion out of trading. And that's what they think psychology is. Take emotion out. Good luck. This is your hard-earned money. This is your time. This is your ego is vested. Oh, my ego is one of my biggest problems, probably still is as a trader. Pride and an inability to accept being wrong was something that I struggled with as I look at my own personal journey in trading. The psychology. There was a study conducted that won a Nobel Prize, and the study was I believe, was in the 80s at the time. won a Nobel Prize in economics, behavioral finance, they called it. But essentially, they established that 80 to 85% of the general investing population are predisposed, pre-wired to cut their winners short and let their losers run. 80 to 85%. That is the tendency. Right. So in some regard, some people are just naturally not that way. I was not one of them. When I took the test that was given, I fell into that, and I'm like, oh, I've got to work against my natural self. Fine, that's fine. It's just a recognition of understanding that. So that's what we're up against. But biases are subconscious. That's what makes them biases. So these social and cognitive biases that we have, it can play such amazing. I could tell you story after story. We may have time to get to them today. Let's dive into it. Here's the disclaimers. Don't forget that, as always, educational illustrative purposes only. I'm going to keep reminding you of this because, and I wasn't sure what type of trade it would be, but I am going to be starting to send alerts. The first iterations of an alert service via Discord, where I provide very specific, trade guidelines and information. So the disclaimers are going to be extra important to remind you that also is no recommendation, simply illustrative of our concepts. Our agenda then, understanding and managing. You'll see understand, you'll see manage, you'll see try to control, and even there, manage rather than control, because it's not like, ooh, control. No, we manage them. They're not wild animals, right? They're part of us. But you don't see eliminate or remove emotions from trade. No, understand and manage your emotions. Think about it, talk about it. What happened on that trade that you panicked, that you hesitated? Really hold yourself accountable, but using some specific ideas of what it is that you're trying to look like. What is it supposed to look like? So we want to dive into the psychology of trading. We want to understand the importance of discipline and patience, two things that most people who are drawn to trading are not naturally strong at, right? We tend to be a bit impetuous and impatient. And sometimes we tend to break the rules. So then what do we do to master discipline in trading? It's very important that when you put the time in for this level of process that we're doing, the plan, every process, every step, right? The implications, how we do things, why we do things, the ways that we look to improve and build on that knowledge and that experience that we continue to gain. If we can't maintain discipline with the plan is really not helpful. So important, especially as you look at times like now, where you might be like, oh, things are going to fall apart. And then all of a sudden we squeeze another day, and then we squeeze another day, which is why I say, well, I want to have a plan. Great. Sell something. Then as it moves higher, we can let it run a little better. So it's a little easier to let it run. I don't have to look at everything in such absolutes. Scale it out a little bit. That's how I manage my psychology through how I manage the trade. So we want to develop a winning trading plan. What are your thought process as you craft your strategy, your rules? You have to take yourself and who you are and your strengths and your weaknesses into consideration as you develop your rules. It doesn't make sense to make a rule that you're going to struggle with. Find a way to give yourself a little leeway in certain areas, and then hold yourself, to a certain standard of execution after that point. One of my accountability measures that I like to use is to rate a post-mortem of a trade, where I look at what was my setup. Did I wait? Did I go early? Did I get a trigger? What was the trigger? I evaluate my trigger and my stop and my target and my time frame, and I evaluate how I manage the trade, and basically look to find weaknesses in execution that we may not see real time. It's why they watch film in sports, right? A coach or a player, you can only see so much real time. And then afterwards, when you can step back and stop and rewind and you see the bigger picture, you're like, oh yes, we can't, we've got to fix that. We have to have that ability in trading to make these adjustments. And if you don't have, the process standardized, if it's not a habit, then it's, what are you trying to fix, right? What the record keeping loses its effectiveness, because what story is it telling if it's a somewhat random execution process? Nope, we have to be very disciplined, very concrete, very black and white with what we do. Look at the synergy of emotions, discipline, trading plans. Hopefully you're seeing how it all ties together. It doesn't work without all of these mechanisms in place: the structure, the routines, the ability to, see without, finding yourself myopically analyzing just that trade at that time and not ever seeing the big picture. Okay, let's dive into it. Long intro. I'll get it. Questions as they come. I will be seeing them. I will answer them. Stories, anything, very helpful. Understanding and managing your emotions in trading. So hopefully you've already seen the role of emotions, but like I said, if you haven't, go look at the top 10 trading mistakes and see how many of them are rooted in your psychology. The way we set expectations, the way we take risk, the way that we gain confidence or lose confidence, the way that we lose discipline, the way, right? All of those things. Common emotional challenges. So I'll tell you right now, this is the challenge. You have to get more comfortable letting your winners run, which means taking risks with wins, and less comfortable with losses, meaning a willingness to draw a line in the sand and shut the trade down. Just simply cutting losses short and letting winners run oftentimes is enough. That's enough. And some of you are probably already nodding your heads like, yeah, I've seen that in my own trading already. I've had people reach out or in comments saying, I've gotten better at cutting my losses or gotten better at holding winners. I've seen it. He's not here today. Steven was saying, oh, I'm waiting for this price. And we all watched it real time. Oh, got to it. Wonderful, right? The patience to let these trades, because sometimes you start to see people and they're like, oh, there may be a recession. And then you see something on the chart. You're like, oh, we're hitting resistance. And what happens? Fear with winning trades. That's not what we want. Fear should be fear of losing money, not fear of giving it back, right? We can't let fear cause us to lose discipline in the way that we execute. So those are the emotional challenges that we tend to face, battles between hope and fear. And then throw a mix of pride in there, right? When we talk about what are you afraid of, most people say afraid of losing money. If that were true, you would actually be excellent at cutting losses short. You're probably more afraid of being wrong, more afraid of regret. Oh, I'll be so sad if I sell it today and it comes back tomorrow. That regret keeps you in the trade, that fear of that regret. If it was fear of losing money, you would shut the trade down, right? So we want fear of losing money when trades are going wrong. What do I want when trades are going right? Hope, right? I don't want hope when I'm losing money. Oh, I hope it comes back. Hope it comes back keeps you in bad trades. Fear of losing money gets you out. On the upside, hoping good trades turn to great trades keeps you in trades. Hope. How do you hope? I want to hope with a good risk management plan, with tightening stops. I want to hope knowing that I already booked a nice 30% gain on a piece of that. I've already tightened my stop. I'm already right. It's not like I'm just like blindly hoping everything works out great. I have a plan to tighten my stop, to let it run, to start tightening sooner, to take profits and scale out of the trade, right? But we're hoping that it continues going the right way. You're only going to hope if you stay in the trade. Hope and fear. I promise you, these are the two core emotional challenges you're going to struggle with. Sandy made a great point, but your size of trade can help that, right? Absolutely. We have to control risk in order to control our psyche, our emotions. It starts with what? With controlling risk. That's what we said to sum up last week. If we get that risk to where we can manage that initial reaction and not have like, oh, what am I going to do? It's the turnover rate. How much do you turn over in your sleep at night worrying about your trades? We got to get that down to 0. But absolutely. So what are the impact of emotions on trading performance? The impact of emotions are letting the chimp out of the cage and then trying to sit down at the computer and get some work done. Really? You're surprised if it's not going well? There's a damn chimp in the room screaming and yelling and jumping and smashing on the keyboard. That's the impact of emotions on trading performance. The panic, the fear, the impatience, sometimes the anger, right? That's the impact. So what we're doing here is we're talking about how do we make sure that the professor's sitting at the computer and doing good work, doing professor work, thoughtful, deliberate, rational, qualitative, looking at spreadsheets, writing rules, building structures and routines. That's the professor. Panicking, right? Breaking rules and panicking. That's the chimp. We have to be very careful. What are the strategies for emotional control? How do we keep the chimp in the cage? The psychology of trading. So we talked about the role that emotions play. It's clear, hopefully, at this point, how much that is. It's a funny thing. I remember when I first got into trading, people saying, "Oh yeah, you have to think about the psychology." Oh, I'm fine. I didn't. Just get your signals right. Right? Get your signals right. You focus on that. Then you realize it's funny when you talk about the Wizards. A lot of them talk about this same journey and how backwards it is. They all said, "Oh, I started thinking about signals and trends, and then I realized, oh, I better manage my risk. Right? I better get my risk under control." And then they realize risk doesn't mean anything if I don't have discipline, if I don't have the fortitude to stick with the plan, if I don't have my psychology right. They all say the same thing. What would I do? I would reverse the process. Start with psychology. Make sure that's strong. Make sure then make sure your risk management is in place and in line. Then work on your signals with that foundation in place, right? Then work on your signals with that foundation in place. You'll notice we actually did. I'm almost a little embarrassed, like, oh, I actually went technical analysis and risk than psychology. However, that's a more fluid process when we're building off of learning about trading accounts. So I'm gonna stick with it. They were all within a week or two of each other. Okay. The importance of discipline and patience. The importance of discipline is hopefully clear. Without discipline, there's no record keeping, right? If we can't say that we execute at like a 90% correlation to our rules, then when we sit down, if somebody just randomly is taking trades and signals, and then they go look at their record keeping, and it's like, well, what do you want to improve? I want to cut my losses short. Okay, well, in order to cut your losses short, you have to think, what can I do with my exit process to make it better? Well, in order to improve an exit process, there first has to exist an exit process, right? So that's the most important thing that we are looking at is, have we already taken the time to develop a concrete and comprehensive process? Then do we have what we need to execute at a 90%? Meaning, when you look back, if there's 10 points, 9 of the 10 should be like, yep, spot on. And then you're identifying what's the 1 or 2 where you're like, oh, I missed this. And then we're looking to continually improve our execution. Key principles of discipline is the word itself, disciple. Disciple of what, right? We don't want discipline to be like white knuckle, I'm gripping the wheel. That's not discipline, that's panic. Oh, I have to do this or else. That's panic, right? The key principle of discipline is disciple. You believe in it. What do you believe in? You believe in your process. You're a disciple to the process. That's why we every 2 months, 1 week at a time, go through those 8 sections over and over again. We don't go through the plan once and say, all right, hey, you got a plan. No, once gets you started. Second time starts to get it refined. Third time starts to get it polished. Fourth time, now you have something that you can really start to test ideas and see records and be like, this is a consistent process. That's 6 months. 6 months, 3 passes, 3 iterations at your trading plan. Yeah, we're going to take the time to do that. You hopefully have developed a belief in this process that you're like, I know I'm not going to always be right, but I'm also not going to panic because we tend to stay in front of the money with what we do, right? There's been nothing, unless, correct me if I'm wrong, there's been nothing that's really come out and just like surprised us or shocked us. We've always seen things coming. We've eased up when we needed to ease up. We pushed when we were told to push. Market tells us and we salute and say, yes, sir. All right. So that's the power of the discipline is what gives us the power of patience, is the ability to wait. We don't force trades in certain markets. It's much easier for me not to be impatient, right? When I know I'm correlating my actions and my decisions to market conditions all the time, right? If I'm slowing up, there's a reason. That patience has come from the belief that these signals will work out for me most of the time, and in the long run, better than anything else. And that's what it's going to do, is it's going to help us avoid impulsive actions. You can see it, I think, already as we talk about trades and we talk about when things have gone wrong. Our users are phenomenal. Our group members, if you look at Discord, and you'll see where they say, oh yeah, I did this wrong. They see it, they analyze it. That's experience. Experience is what we get when we didn't get what we wanted, but we have to have the ability to process that experience, to parlay that into an improved set of rules. We have to have the qualitative analysis, our spreadsheet, our record keeping, to show us exactly what needs to get better. So this isn't just blindly like thinking we've turned on a switch and now our psychology is good. This is saying, look at the extent, the breadth, the depth of our process, what goes into it, with every rule, every routine, the structure, top-down approach. We start with the market, we move to the sectors, we find where the money is. We very much believe in the institutional driver of our market, knowing that 90% of the money in the market is institutional. If we can get that right, they're slow. We can ideally move a little bit faster and get in front of it, take advantage of it. That's the objective. It's very clear. That clarity is what should be helping your psychology to strengthen. That you're not just, blindly hoping that the rules somebody gave you might be working out. That you're like, I know why I have these rules. I know what the implications of, what these signals and what these triggers mean. Strategies for maintaining discipline and patience. It is the plan. That's the number one strategy, quite simply, is creating the routine. When we sit down and buckle up in an airplane and the pilots get in, they don't sit down and be like, okay, you know what? Today we're starting over here from the right side. They have a computer. The computer's like, do this. They do it. If they don't do that, the computer's like, go back and do this, right? Everything is every time, same process, same sequence. Somebody's looking at the process of who is supposed to tighten those bolts, because without that process, that's when we have loose bolts, right? And so, right, what we're thinking here is we don't want any loose bolts. Our strategy for maintaining our discipline and our patience is to have processes that say every week I market posture. And based on that, I'm going to create the guiding thought process. Am I willing to anticipate or not? Am I going to set stops a little tighter or loosen them up? Am I going to sell a half when it gets to a certain point, or only a quarter or a third? Right? These are decisions that I'm not trying to make trade by trade. Those are decisions we talk about that on Sundays and say, hey, you know what? In this market, I'm definitely willing to anticipate. In this market, I'm only going to sell a quarter, maybe a third, and let the rest of it run, because that's what we're seeing in this market. That's what got trades in late November and December really catching some fire, even a little bit still here now. It all comes from the plan. If you haven't taken the time to really start going section by section into the plan, that's where your work begins. How do we master discipline in trading? We've got to set clear trading objectives, clear priorities, clear processes, step-by-step routines. What do you do in the morning when you sit down? What's the first thing that you do when you do your morning market analysis? What do you do during market hours? Are you there the same time every day, or is it only certain days? Well, if it's only certain days, make sure there's a certain structure. If it's every day, make sure that every day you're following the same pattern, the same routines. Right? Like a checklist. Yeah, there's too many moving parts. We're not just like expecting ourselves to come in and just start like, firing things off. You're sitting down at the plane. Let's have a list so we can say, yep, I've done that. Yep, I've done that. Nothing falls through. There are no loose bolts. We need to adhere to a rule-based trading plan. Everything is rule-based. We have a rule for it. Some of our rules are specific, like trading rules. We have a rule that dictates what does setup look like. We have a rule that dictates what do I need to see for a trade, anticipatory versus confirmed. We have a rule that helps us to establish where the stop should be. We have a rule that helps it dictate the target and the time frame. We have rules to establish the position size. All of these things are trading rules that should be implemented the same way every time I do a trade like that, a bounce trade, every time I do a continuation trade. If I do a breakout trade, whatever it is, I'm doing it the same way every time, rule-based trading plan. Some of our rules are more generic trading rules, right? Which may just be dictating risk management. Like how many trades can I have on at any given time? What are our rules around routines? What do I do in the morning, in the afternoon, at night? What do I do on the weekends, etc.? We need to practice mindfulness and self-control. I absolutely think that visualization is a key tool. I want to see, what am I doing when I'm trading my best? What does it look like when I'm seeing signals that might cause me to get a little concerned, but sticking around anyways, not letting the emotions dictate a panic exit. Meditation, right? 10 minutes of meditation prior to your trading session, where you sit down, you breathe, you clear your mind, you think, you gain clarity for what it is that you're about to do. I love that stuff. Absolutely. I'm trying. I'm not great at it, but I'm trying to incorporate more meditation in what I do. And make sure that you're implementing risk management strategies. Section 4 of your trading plan, which is what we're working on this week, coincidentally, completely defines all of our risk management structures mechanisms and specific rules. How much risk do we take at any given time? How do we adjust risk according to market conditions? How much risk do I take on any given trade? How many trades am I willing to have on at any given time? What type of tsunami indicators do I have that indicate a potential surge and reversal in market conditions? We use the VIX as one of ours. Those risk management strategies should also help to promote more discipline in how we trade. Bottom line, what we need to do here, develop a winning trading plan. Sandy says, I'm a real fan of lists. Treating this like a hobby at the moment, need to adjust. There you go. I love that. Something I tell people a lot when I first start working with them in a coaching setting is, if you treat this like a hobby, it will pay you like a hobby. Right? Which means what? We pay it. Like golf, like stamp collecting, like photography, right? Whatever it is, hobbies tend to be expensive. Yes, we do not want now when we say let's treat it like a business, that doesn't mean 40 or 50 hours. That means, do I have a plan that looks and feels like a business plan? And you'll notice that's how ours is. It starts with number one, personal summary. Like a business plan starts with executive summary. First question we ask, who's driving the ship? Then we start to get into the structure of, well, what makes you think you're going to do this? Well, because I'm going to start by understanding the market. And then I'm going to have great rules. And then I'm going to make sure that I have really good risk controls. And then I'm going to have great routines and habits with lists and checks and balances. All my routines developed. Then I'm going to keep really good records like a business wants to, right? Keep really good records. And I'm going to have strong analytical processes to process those records in order to gain insights through my analytical structure. Then I'm going to have mechanisms to take my insights and turn them into improvements. Right? We're going to turn insights into improvements. Those are all the sections of our trading plan. Right? It's all in place. Always focus on improving risk. Oh, I went right through that. Set clear trading objective and goals. Develop a comprehensive trading process. When you have gone through the trading plan 3 times, 6 months, I guarantee you, if you spend an hour a week on each section of the plan during that 6 months, and you're trading real time and actively, at the end of that 6 months, you will be a completely different trader. 100%. There's everything you do, how you see the market, it will be different. 6 months. From there, it's just a matter of refining your individual process, but your foundation should be in place at that point. Our process should always be focusing on improving risk management. The key element of our record keeping process that unfortunately a lot of people don't get to is Kelly criterion. Kelly criterion is a risk optimization formula. So once we have gone through and we've built this business, we have this plan, 3-4 passes, we have our spreadsheet, our record keeping, we have positive expectancy, we've got hundreds of trades, at least 100 trades, hundreds of trades under our belt with positive expectancy. We know, everything is running like clockwork. Now what? Now we go optimize our risk. Most of the time in a scenario like that, people have the ability to actually take more risk, which means do exactly what you're doing, but make more money, because you're only going to take more risk if the numbers tell you. It's data-driven decision. And you're going to, and anytime you take more risk, you would do it very incrementally, but That's right. What we're doing is we're focusing on improving our risk management and understanding what is the capacity that our trading system has. I want you thinking about back testing. Are you back testing rules? Are you looking back and validating that your signals make sense? I want you really thinking about your analysis of are you implementing things the right way? And are you getting the consistency you need to trust the numbers that you get on your record keeping? Lastly, Kaizen, constant improvement. Constant improvement. This process is a cycle. Shampoo, rinse, repeat. Over and over and over. And every time we're trying to just gain a little more insight. It doesn't, that's the thing about, right, the concept of continual improvement. It's not like you make these huge dramatic turns. It's that you're making it a little better here, then a little better there, and then a little better over here. And then all of a sudden, a year goes by and you're making all, and you're like, wow, look how much better everything is cumulatively. We don't have as much tendency to see it, but that's what we're working towards, is that type of a mindset. When I say trading objectives and goals, do I mean for each trader overall? I mean overall. Yeah, I mean overall. I mean the objectives or goals for a trade really are found in the reward, right? When we say, oh, I'm risking X because I think my stop is going to be at this level, and I'm gaining Y because my target's going to be at this level. The gain, that's the target, that's the reward, that's the goal. The goal, maybe the goal becomes a rule when you say 3-to-1 reward to risk ratio. When we think about goals and objectives, for me, they're always about improving the process, right? When we think about performance, it's just simply, I set an expectation and I'm hoping it gets there. If it never gets to my expectations, I need to set them a little more realistically. If it's constantly going past my expectations, I need to set them a little more ambitiously. I'm willing to make adjustments and adapt, but we need to have that overall. So we want to be thinking about emotional intelligence in trading, which means what? Which means we're thinking about it. We don't try to sweep emotion under the rug. We invite it to dinner, have a conversation. We talk about it. We explore it. I always joke and tell people when I coach, I feel like I'm 1/3 trading coach, 1/3 counselor, 1/3 bartender, depending on the day, right? Well, how did that make you feel? And sometimes I'm like, oh, yeah, I've seen some real nasty things happen to people in trading when they broke rules, really nasty things, devastating things. We want to make sure that we are not putting ourselves in that situation. And it's hard because, I remember a couple of very specific instances where they're saying, you were telling me, don't, right? Yeah. When you look at, well, why? I remember things people told me, and then I went and did it anyways. And when I did it anyways, I'm like, oh my gosh, that guy told me that would happen. We've all had those situations. We're trying to have that happen less. We're trying to say, hey, emotional intelligence is, can I have less of those? Where when someone said something, I stop and I consider it and I think, yeah, you know what? Maybe I should consider if that happens to me, if I do that. We want to make sure that discipline is the cornerstone. We got to believe in the process. And in order to believe in the process, you've got to know that you're committed, your commitment level. You got to have that vision. You got to have the perception that this is your business, not by time, but by commitment, that you have the rules, the routines, the record keeping, the structure. You have a process where you say, this is why I expect to maintain a positive expectancy, because I'm going to trade harder when the market's good and less when the market's worse, because I'm always going to control my risk, because I'm always going to have an eye out for a hedge when it seems necessary. Because I'm right, all the things that we're trying to do now, where we say, hey, look, the market, we had 2 weeks in a row where it dropped, but we were still putting bullish trades on because we were still over 5 on our posture. We recognized things had eased up a little bit. We had our finger on the trigger for a hedge signal once. It's on there again, but it seems like that's going to fade away. So we're like, okay, now what? Now you're glad you put some bullish trades on when you did, because it's starting to feel like it's running out of steam, look like it's running out of steam. We want to make sure that our trading plan is our roadmap, understanding that it is a fluid process, a fluid journey. We're gonna build that roadmap, and then we're gonna start over at the beginning, and then we're gonna do it again. A little bit more detail, a little bit more structure. We know the road a little better this time. And then we do it again, and it's a little more clear, right? And it just gets better and better. That roadmap gets better and better. And we embrace and develop emotional intelligence through this process. The whole process is in place. We have the record keeping, we have the trading plan structure to develop our rules and our routines. We have the elements that we need to understand the markets, to understand ourselves, to develop these rules. We keep and maintain a watch list, right? All of these things that we're doing are all just part of this, doing it over and over and over again. And then we just habituate the process. Okay. In summary, emotions in trading, yeah, our success hinges on understanding and managing emotions. The chimp is always going to be there. We can't get rid of the chimp. Chimp is part of us. But can we keep the chimp in the cage? Can we understand it, manage it better? Can we get work done when it's taking a nap? Whatever. We need to recognize emotional triggers. We need to maintain emotional balance. We need to make rational decisions, putting the professor at the computer, navigating the markets more effectively. Discipline and patience. These are key bedrock of trading. Discipline to what? Discipline to the process. You believe in the process. And through that belief and through that discipline, we have the ability to maintain patience, to put the right emotions in the right places at the right times. We need to cultivate discipline. We don't just decide to be disciplined. Oh, I'm disciplined. There's no switch. We cultivate, build discipline to stick to the trading plan. The patience that we're trying to develop ensures our well-timed decisions. By mastering impulse control, we reduce risk and we increase chances of success. Obviously, our core objective, developing a trading plan. Craft a solid trading plan with clear goals, well-defined strategies and rules. Incorporate risk management. Continuously refine your plan to adapt changing market conditions. A robust trading plan is our roadmap to profitable trading. Sandy says, embrace and acknowledge the chimp, but don't let him ruin the show, or don't let him run the show. Exactly. Yeah, the chimp can be great. We can have a lot of fun with the chimp. Not when we're trading, though, right? Not when we're trading. Questions? What do you think? Psychology. It's gotta be the forefront. Too many people have it as like, oh, I'll get to that. Every decision, everything we do should be hinged. I got my wife and I bought my son. He's about to turn 22 this summer, some books. One of them was one that I enjoyed at his age when I was in college, is The Art of War. And we talked to him a little bit about it. It was great because I found that some of the same things that I loved resonated. And it was an interesting thing because I read a few philosophy books. I'm like, that wasn't for me. I didn't like these philosophies of, oh, this is how we should think. I liked The Art of War because it was very strategic. It wasn't telling me how to think. It was telling me how to consider. What do I need to consider? What questions do I need to ask What information do I need? Because if I have the answers to those questions, if I have that information, I'll make the right decisions. And that's what we're thinking about here, right? Is it's not like do it this way. We're saying, look, let's have this process, the structure, let's have the right mindset. And if we do that and we commit to this, the process will organically create such a different trading environment and experience for you. Brad says, where do I access webinar recordings that I've missed? Okay, so those are actually in the YouTube. That's actually a perfect question. They're not off topic at all. So you have, in fact, I probably need to put that. I probably need to put that in. I'm actually glad you brought that up. Because I should probably get that link. If there's ever a time that you miss something and you want to go watch it, let me just pull this up. But here you have the welcome doc. I'll probably put it here in the welcome doc. I'll probably add a link for the YouTube channel. And so you can come in and but I send emails. I hopefully when did you sign up? And I'll make sure that your email is on the list. But if they'll come, okay, you should be getting emails. Let me see. They initially sometimes get caught in spam, but drop your email and I'll make sure that it's on the list. Steven said, Scott, perfect discussion for my question. When may we have the new spreadsheet for the 3 exits? When will we discuss the first 100 trades we made? That's a great question. I may have to see about I think like we said, maybe like scheduling a supplementary webinar sometime, because yeah, that's a full discussion going through some results like that. Let me think about that. But for sure I think that's a great idea. Okay, let's see. Got it. Brad, I got that. Let's see. Why won't it let me copy that? Okay. Huh. We'll see. Any other questions? Certainly let me know. Yeah, so sometimes the links will go in Discord. Sometimes the links will go in, well, always I'll put the links in the, so I'm going to type this email. I can't copy and paste for some reason. E Gray. Sorry guys. Okay. Yeah. So always working on ways to make sure that you guys have access, but I'll usually put the links in an email the same day. All of the content library has links to like YouTube things. So if you went to any of these, you would actually be able to dig around in there. All of these are on our YouTube channel. So if you look at the Trading Foundations course, the market posture videos, trading plan videos, all of this, the Options Foundation, all of this information is on the channel, and you can get to it through this link or through the channel. Yeah. Steven said too few are using Discord. That's going to change because the alert information is going to come through Discord, Steven. So I've got a plan. I have a plan. Awesome. Okay, so tomorrow morning, we have midweek check-in. So make sure that you come on 15 minutes before market open. We'll talk about what we're seeing and going. So there you go. Awesome. All right, you guys. It's good to see everybody. Have a great rest of your night. And as always, happy trading.